Yo, what is up, guys? Welcome back to another video. In today's video, I'm breaking down the one and only trade I took on IWM to make 35%. 35%, absolutely nasty. And I didn't think I was going to take a trade at all today, simply because we came down. If you can see, obviously you guys can see my screen right now. We go to the, not the 4 hour, go to the 1 hour time frame. Oh my gosh, bro, if I could use this thing properly. The 1 hour time frame, we had this huge gap down. Right, we hit pretty much this low right here, bounced back up, came back down the next day, pre-market, took these lows here, and I didn't think that we were going to get any move. I thought we were going to get some sort of consolidation, especially with it being so close to Christmas. It's December 23rd right now, so I thought we were just going to get mainly consolidation, but we ended up having a nice move, and it did pretty much exactly what I wanted it to do. So going into the day, looking at the 1 hour time frame, first thing I saw was price had already tried, so it already took this high right here that I had already previously marked out. First thing I was looking for was a move above this high and then a retest for continuation higher. We obviously didn't get that going into the morning, so we got a lower high here, and we began to sell off into the day. Once I saw that, I started looking at targets to the downside. So one target I marked out was the 1 hour. There was a 1 hour fair value gap right here that you can see by this box. 1 hour fair value gap. There was also one right here as well, but we already had broke through that and retested it. So, I mean, just more confluence for it to keep going down. If you would have marked out this 1 hour fair value gap, price came down, broke below it, here, closed below it, came back up, retested, and then got rejected by also the EMAs and the bottom of the fair value gap as well. But in this case, we went with the lower fair value gap because it perfectly lined up with the 50% retracement. So it drew fib level from this low to this high here, 50% and 61.8% retracement. And then it also just marked out another area of liquidity that I saw, which was on the 5-minute time frame, which I don't normally mark out the 5-minute lows to use them as liquidity because they're not as relevant. Only major higher time frames are, but in this case the 5-minute made sense just because we didn't have as much action in the previous days. We had too much action in the previous days, to the point where all highs were pretty much all the way up here, right? And we already took out the most recent one, so I'm just looking for some more recent lows that aren't all the way down here at the bottom. So and the reason being is because we had already created this low, and then we took out that low and made a move higher. So I'm not looking for price to continue trying to take the previous low. I'm looking for it to take some internal liquidity and eventually take these equal highs to fill this gap back to the upside. So that was my thought process with it. But overall, we had two levels. We had the fair value gap on the hourly time frame, and then we had the 50% retracement from on the hourly time frame as well, from this low to this high. If we zoom in here on the 5-minute, obviously, as you can see, this was the low that I was looking at. So right over here, I'll just zoom in on this. Right over here, we had this low right here. We had this push down, push up, and then I marked at that low, and I was targeting that. And that perfectly lined up with the 1 hour fair value gap and the 61.8% retracement. They were all kind of clustered together in there. So break down to the 2-minute, that's where I ended up taking my position. So when the day opened, I stayed patient, waited for price to kind of do its thing. I saw us get rejected from this 2-minute moving average, and that made me want to look for a position to the downside, because if we weren't going to try to push up and take the previous highs, like I said, break above, retest, and continue higher, then I was going to look for some internal liquidity. So we came up to this 200-day moving average on the 2-minute, got rejected pretty aggressively, had a nice move to the downside, took out these lows from the pre-market, bounced back up, and then made a lower high below the 920 and 45 EMAs. Once I saw that, I started to look for a position to the downside, and basically all I did was take a position once we broke below previous low. So we broke below previous low here, we came back up a little bit, and I entered here, and then I just set my stop losses. And this is somewhat of a wider stop. I set stop losses above pretty much these series of red candles to the downside. This isn't a red candle, but these series of candles to the downside set stops above this high, which was the lower high that we had already put in. Price continued to respect the 9, 20, 45 EMAs, and then we went down perfectly to my target. So we came right into the zone, which was the 1 hour fair value gap, and we came right into this level, 219.92, which was the 5-minute level of liquidity, and then finally we came into the 61.8% retracement from the hourly time frame. It did chop around a little bit, but overall ended up hitting 35% on these options to the downside. So we had a nice push down, entered here. Red arrows are my entries, purple arrows are my exits. Bounced up, continued to reject, and then had a nice move down. So overall, that was the trade for the day. Not looking for anything else. Obviously, as you can see, we're kind of chopping off. We're chopping the rest of the day now, and we're kind of forming like a wedge pattern. And I'd rather just stay out of the market with it being this close to Christmas. Probably won't trade tomorrow, but we'll look for a possible setup if there is one. Hopefully you guys enjoyed today's video. If you haven't already, hit that subscribe button down below. Like this video for more videos like this one. I'll see you guys in the next video.